when you are employed, and that is for Faraji Ready Home. If it is Ustawi, the maximum repayment period is 15 years, which is still subject to retirement age, because we don't want to lend to somebody, being that your salary is your consistent income. We don't want to put you in a very precarious situation where after your income has stopped, you are not able to pay, because now we went beyond your retirement age. So we would want to be able to cap it in a way that by the time you're retiring and you are a homeowner. That's why we have the cap at the retirement age. For business owners, we are trying to control the repayment fatigue, noting that the mortgage will not be generating cash flow within the business. So we will give you up to a maximum of 10 years. This is for business owners. Interest rate for a Faraji home is 8%. Ustawi mortgage is 12%. You do not require a guarantor for a mortgage. What you are going to use as your security is a title deed or a lease. This is what we'll use by you, us taking ownership between you and us. We will co-own it up until the time you will clear the mortgage. So we'll do what we call a registration of charge. For Faraji Home, we do not have a minimum amount that you can borrow, but for Ustawi, we have up to 3 million minimum. That is the minimum amount you can take up as Ustawi. Maximum financing for Faraji Ready Home. This is because it's controlled by KMRC. We have a maximum financing amount of 8 million. However, for Ustawi, which is our own product, we have up to 20 million. This is for those people whose properties are above 8 million and they still want to take up a mortgage with a Sacco. The loan to value is 100% mortgage value. You are because we are going to use the title as security, we'll have to do a valuation on the property. The valuation will give us the open market value, the mortgage value, which is the value of the property as per the current state of user, that is residential, and for sale value, that is the value of the property if sold under duress. So for us, we will give you the benefit of using the mortgage value, which is still we should still be able to fetch in case of anything. So we'll give you the 100% mortgage value. We had our customers in mind, whereby you will realize most of the sellers will sell the property at almost equivalent to the mortgage value. So that we don't ask you to go through a lot in trying to raise equity. And even if you're going to raise equity, that is the contribution towards the purchase, then the amount you're going to raise is not going to be a lot. So we are able to fund you an amount that you're comfortable paying back, receiving, and also we allow you to have an amount that you're comfortable to pay as part of your equity to the seller of the property. For our mortgage properties right now, we can buy off a mortgage from a bank. That is, you already have a mortgage that is already running. We can buy it off and transfer it from the bank to us, because one thing you need to realize is that our interest rates are favorable and they are not controlled by the regulators, whereby they will give you a base rate. And in case of any changes in the base rate, then you will realize that the interest rate will go up, because that is what they use to cap their interest rate. So if you're interested in buying off a bank mortgage, then this is the best place to come to, because we have our interest rates controlled by SASRA, and there's no capping whereby in case of any changes, then it will go up. And at the same time, KMRC have given us a better interest rate regarding the funding that they are giving us. So with KMRC, the interest rate is way, way lower at 8% per annum. The interest rate is per annum, not per month. So you can imagine at per month, you are almost paying less than 1% for KMRC. And for our Ustawi mortgage, it's 1%, still a better rate than the bank rates. And for our mortgages, you'll realize that the only cost that you will incur is the processing fee, which is what we will charge as a Sacco. We will not have other hidden charges within the mortgage facility, apart from the other external charges that are paid at the point of processing, so that you're able to cover the facility with the security that you're using as a title deed. We do not refinance other loans using a mortgage, majorly because we do not want to compromise the value that we have given, noting that we've already given a better loan to value of 100% of the mortgage value. So at this point, we are not refinancing other loans. However, if you want to buy off a mortgage, that is a loan that is already mortgaged, then that is one thing that we can refinance for you. The repayment mode for the Sacco at this point is check off for those ones who have a common bond with us. By that, I mean that we have an MOU with your employer where the employer deducts your payment at source and remits it to us so that we carry out the posting to your loan. So you don't have to bother thinking about if you have money in the account. That is for the deduction at source checkoffs members whom we have an MOU with, but we have not left out those who don't have an MOU. And that is why we have the standing order option, whereby where your salary is processed or where your business income is channeled, we will set up a standing order through you so that your payments come to us as per when you're receiving the payments, and the same is credited to us towards repaying the loan. We from our understanding, I want to believe that you've had mortgages have other additional costs. For our case, the additional costs that we have are on the part where we are processing the facility, whereby you will incur the valuation fee, then you will incur the legal conveyancing fees and insurance cost. And as I've highlighted up earlier before, the processing fee for, I think I didn't capture, the processing fee for Faraji is 0.5% and for Ustawi is 1%. Still a very good rate, because if you are to do your market comparison, most institutions will do for you a 2.5 or 3% processing fee. For us, we've put in mind that we want to empower members. So what we are giving you as a processing fee is already reduced so that you don't incur a high cost of credit as you are processing a mortgage. So the valuation fee we have, when you look at the valuers are controlled by their regulatory board, and so they have their own scale of fees, which is as per the laws of Kenya Cap 532. So they are guided by the value of the property. This fee is as per the different values of the properties. This is what they have been set up for by their regulating organization. So for this particular one, we may not be able to control it, but at the same time, we give you leeway to negotiate with the valuer, because the valuer has the upper hand in deciding on what to give you as a discount. So that's why we have a panel of valuers that we allow our members to select from and negotiate with them. We do not get involved in the discussions because we don't want to have conflict of interest. At the same time, we have negotiated with our valuers so that we have made them understand that whatever fees they're giving our members is not exaggerated and is followed as per the law, the laws of Kenya, that is Cap 532, and they are allowed to also have it negotiable, giving their members a discounting margin regarding the amounts that they will charge. You'll also attract a mutation fee where you will need to pay for a mutation map fee. That one is per map, depending on the property that you're purchasing. Some of them may have more than one map, so you'll pay 500 shillings. These are estimates. So sometimes you'll wonder, yes, I want to do a mortgage, but how much am I going to pay in terms of valuation, in terms of conveyancing? So we came up with this summary so that as you are planning to do a mortgage, you are able to know the cost of credit regarding the external costs that you will incur as you're doing the conveyancing. We also have a search that has to be done. With the upcoming RD SASA, which is within Nairobi, I believe that such fee will go lower. And as we continue to automate the government and through the lands board, as they continue to automate the search to be done online, the search fee should go lower. But at the moment, it's still being done manual, apart from Nairobi, who are working at rolling it out to be online. So the search by the valuer is 2,000 shillings. Then we have the VAT, which is what KRA requires the valuer to pay, which is 16% of the valuer's fee. The valuer may also charge other miscellaneous charges, that is the transport to the property, but those are charges that as you engage the valuer, you are able to negotiate with them so that they give you a better cost, so that you don't incur a lot even as you are doing the conveyancing. We have the legal conveyancing fee. This is the fee that you pay as you're doing the legal charge. Allow me to clarify that we will take the property as security. We will use the title deed as your security, and the title deed will be jointly registered between the Sacco and the member. And that is why we have the lawyers coming in to carry out for us the conveyancing fee. So they charge the legal professional fee as per LSK remuneration order. This is the professional fee. It's guided by LSK. The same time, you can negotiate with the lawyer so that he gives you a better fee. Stamp duty is standard 2% outside municipality, 4% within the municipality. This is 4% of the mortgage value, the loan, the amount that you are taking in as a mortgage. Valuation at lands registry, they have to carry out their own valuation and give it their own value. So you'll pay 5,000 to 10,000 depending on the registry. We have different registries where the properties are located. So different registries have their own valuation cost that they charge for the property to be valued. We have the land rates and rents. This is depending on what is outstanding. My recommendation is that as you are purchasing a property, ensure that you are talking to the seller so that he does not transfer land rates to you. By the time you're buying, ensure that the person is up to date in terms of paying land rates and rent so that you don't take up an outstanding bad debt at KRA that is going to affect you in future. Stamp duty charge is payable at 0.1% of the mortgage amount or the loan amount. For reconveyance, whereby you may be doing a further charge, then you'll do 0.05% of the loan amount. We have a consent to charge. That one is charged 5,000 to 15,000 because you have to give us consent to charge the property, and the same is applied at Lands Board. We have the registration fee to charge, which is 1,000 shillings, and then the search at registry, which is 2,000 shillings, same as what the valuers charge. We have insurance costs. We are trying to cover the facility in case one, the fire and peril covers you in case you have any eventuality regarding fire, regarding political unrest, maybe in that area something happens, natural cause. There are various categories that the insurer has classified in terms of fire and peril, and so they will charge 0.15% of the mortgage value stroke insurable value, which is the value of the property, because the land will not be affected, but the house will be affected by fire or natural calamities or any political unrest that will result into the property being damaged. So that is one of the things that we take care of through our insurance company, so that if anything is to happen, you are at peace knowing that that is already taken care of and it is covered in the insurance. So the insurer will pay you back the amount equivalent to the insurable value. Life insurance, this is the insurance cover in case of death. That is, if you die, you don't want to leave your family with debts. Allow me to use an example in the Bible where there is a lady whose husband died and the husband left her with a debt. You can imagine she had to look for a miracle for her to be able to meet that debt. And for our case, we are not trying to be, we don't want to work a miracle around it, but we just want to take care of the eventuality because we understand risk, anything can happen. We don't want a scenario whereby, God forbid, anything happens to the member and we are going back to the wife to require them to pay or the family members to pay for the mortgage. So we take care of the life insurance that in case of death, the insurance company will come in and settle the outstanding debt, and your family will continue living in your house knowing that you have already taken care of their future. What will I use as security for my mortgage? Title deeds or lease, that is what we use. To take care of the Sacco's interest, the same will be jointly registered between the Sacco and the member. The collateral should be duly charged and insured based on an independent valuer's report. That is why we have the valuation that is done at the point of inception. Briefly, I'll just take us through what we do here regarding when you come to us and you tell us you want a mortgage. So you as a member will approach us and you're interested in a mortgage facility, the Sacco. So you will provide for us your income details so that we can do your pre-qualification. For salaried, we will do a payslip. For business, we'll look at your cash flow. That is, we'll look at your 6 months bank statement, see the nature of business, understanding the nature of business. We will discount it at a discounting margin that we've put for business incomes. The the salaried customers, salaried members will do it as per the 1/3 rule, which is the rule that is currently used across the board for all salaried members, so that at the end of the day, as we are giving you a mortgage, we don't want to leave you in a place where you do not have bare minimum amounts to meet your daily obligations. So after you've given us your pay slip or your cash flow income statements and bank statements, we'll check your eligibility. That is, we'll appraise it and tell you this is the amount that you qualify. So from there on, you're free to investigate the property, obtain a sale agreement. You identify where you want to buy and get the desired documents so that you're able to present in your application. The sale agreement is just to safeguard you in terms of that you are now interested in the property and you've come into an agreement with the seller who is the one who wants to sell to you the property. This is a legal document, and it's able even to cover us as a Sacco, so that we know that the money that we are disbursing to the member actually goes to the purpose that is intended for. Actually, the sale agreement also forms as a proof that actually the purpose for the loan is purchase of a property, and it's a property that you want to occupy. So after you've gotten the sale agreement, you'll do your loan application, fill the mortgage application form, submit the requirements as per the requirements, which I will be briefly sharing after this, so that you know you're able to know which requirements, know your customer requirements as per the customer categories, and also select a valuer and select a lawyer from the panel that we'll have shared with you, so that you're able to discuss with them, negotiate the fees, and settle for the ones that you know that are within your budget. Then after that, we will carry out a valuation so that we know the mortgage value, which we are going to finance at 100%. Once we get the valuation, we will submit the application to the designated approvers. We obtain the approvals, we prepare a letter of offer duly signed by the designated authorities, and this letter of offer with the instructions will be submitted to the lawyer who will be doing the conveyancing. And once we give the documents to the lawyer will carry out the conveyancing, that is the transfer of the title and charge and registering of the title between the Sacco and the owner, you now the member who is going to be the eventual owner of the property. And the lawyer that we are going to use is the one that you have selected earlier as you are submitting the application. Once the conveyancing is complete, we will do what we call the insurance, that is fire and peril, and also life insurance. And at the same time, you will credit your account with the processing fee. As per Faraji, it is 0.5%. Ustawi, it's 1%. That is the amount of money because we don't recover the processing fee from the mortgage amount, because this is the amount that we have given an undertaking to the seller that it is the amount that we are going to pay to them. Then after you've done the insurance, you've made in the payments for the processing fee, we'll disburse the funds, and the money will be transferred through your authorization to the vendor or the seller who's selling the property. Then once the seller receives the money, they hand over the keys to you, and you are ready now to proceed and occupy the property, because officially at this point, you are the legal owner in co-ownership with the Sacco. And as you occupy the property, then you will continue making your payments towards the mortgage up until the loan is fully recovered or fully redeemed. As I've indicated earlier on, the cost that you are going to incur: valuation fee, legal fee, insurance fee, and the processing fee. Points to note: the above costs that we have indicated may vary with the location of the property. That's why earlier on I mentioned that the same depends on the registry and the location of the property. So there are some areas you will realize that the cost may be lower. Some areas, because of the high-end properties, the cost may be high. So as you are scouting out and looking for property, just try and look for a property that is within your budget, a property that you know it will not dig deeper into your pocket and affect you in future, or affect you as you are doing the processing. SLA, approximately 60 working days. This is because we may have delays in between now that we are using third parties. Registry may take time. There are some registries that will accept special boards. There are those ones who do not accept special boards. their registries would want the seller to present all the owners, all the property, especially if it's a property that has a succession history. They would want all the owners of the property to present themselves to the registry before a charge is executed. They present themselves before a board. So you realize before you gather all these people, it may take time. So we give you approximately 60 working days. Our aim is not to overpromise and underdeliver, but we endeavor to ensure that within the 60 working days or less, we are able to close on this by following up our lawyers to ensure that they are able to do the conveyancing as fast as possible. Our valuers submit their valuation reports as fast as possible. Terms and conditions apply. You, as you are making the application, we'll still check your capacity, we'll still check your CRB, we'll still check your other obligations, especially for business customers, so that we do not strain your debt burden ratio and eventually affect your business cash flow. So the other terms and conditions apply, which are the terms and conditions in regards to our credit policy. What documents do you need? If you're check off, we'll need your copy of ID, certified most recent payslip, original copy of original title deed, duly filled loan application form, and original duly executed sale agreement or letter of offer from the seller. Now you realize there are some sellers who give you a letter of offer because they wouldn't want to do a sale agreement until they know that you are going to get funding. So we'll use either of the two, the sale agreement or letter of offer. Most of the apartments that we are buying, most of them, they'll give you a letter of offer so that you're able to scout for funding before they now come into signing the sale agreement. We will still use the letter of offer as you're making the application in place of the sale agreement. If you are not on checkoff, that is, you're making an application and you are not on checkoff, we'll require a copy of your ID, latest 3 months certified pay slips. That is for the last 3 months. Since we are in May, we'll expect to see April, March, and February. So in the month that you're in, the last 3 months is what you bring to us. 6 months certified bank statement, they have to be up to date. Employer's letter of introduction stating the terms of employment. The letter should be addressed to the credit manager, Safaricom Sacco. And as it is stating the terms of employment for mortgage, it should also indicate your retirement age so that you don't have a back and forth with your employer confirming the retirement age. For the ones that are already on checkoff, we already have an MOU and we know the retirement age for their staff. So for those ones, at least with the MOU, we are able to know the retirement age upfront. But since the ones who are not with MOU, we have no arrangement with the employer, then we'll need the employer to confirm in the letter when your retirement age is. The standing order will cater for the loan repayment. This will be done at the end of the process because we don't want you to start paying for the mortgage yet. The conveyancing is still yet to be completed. So this will be done at the final stages of the mortgage. A copy of the original title deed, just to confirm the property you're buying and also assist the valuer in doing the valuation. Duly filled loan application form, same to the others, original duly executed sale agreement or letter of offer from the seller. For business customers, now this is what you own as an owner, so it may require more documents, especially regarding the legal documents confirming that the business actually exists. That is the certificate of incorporation, copy of national ID of you as a member, CR12, which is up to date, the board resolution to borrow, that is if you're not the sole director and you're going to use the business income as your mode of repayment, then the board needs to resolve to allow you to use the business income as your source of income to repay the loan. Latest receipts and invoices just to confirm that your business is actually transacting. Latest 6 month certified bank statement. If it is a school, we will want to see 1 year statement for the school so that we are able to see how the terms, because the school's mode of income is different compared to business. We'll need a clear map to the business premises because we will also do a visit to the premises. We'll require a copy of original title deed, duly filled loan application form, same to the rest, original executed sale agreement or letter of offer from the seller. Now, mortgage may require so many questions, so we have experts on the ground. By sending an email to Sacco credit team at safaricom.co.ke, somebody will be on standby to evaluate your income, tell you what you need to start, tell you what you qualify for, and walk with you through the journey of you acquiring your house up until the time that you'll receive your keys and move into your house. Our customer service is also well able and ready. Credit customer service line is up as indicated in the slide, and also the customer service lines are available. So by just raising a call, somebody should be able to give you a summary of exactly what you need to do. At the same time, as you submit your income details, the credit team is ready to appraise you and tell you exactly how much you're able to take up as a mortgage, and also what you require even as you walk through the acquiring your home journey. That's all for my presentation. At this point, I will take this back to the moderator, John Langat, so that he may bring and open the floor for the discussions regarding what the many questions that you may have that we should be able to answer you at this point. Thank you, John. Back to you.
Okay, thank you very much, Lizzie, for the presentation that you have given us. Actually, it was very elaborate, and I believe our members who are currently joined in have learned one or two things pertaining it. And without any further ado, I'd love to maybe take some questions, and I'll start first with the people. I've seen two people who have raised their hands, and let me start with Pauline. Pauline, kindly ask your question. Hello, Pauline, where? Okay, it seems Pauline is not in. Let me go to Thomas Njua. Hi, Thomas.
Hello.
Hi, Thomas. We can hear you.
Hi. How are you?
Fine, thank you. What's your question?
No. I don't have a question.
Okay, sorry. Okay, because that's in your raised your hand. Okay, thank you. Now, for those members maybe who still maybe wish to ask their question, our Q&A chats are open, and the moderators who are also currently answering some of your questions. And if I can take maybe one or two question in that category. One anonymous person who asks, what happened if you cannot pay? I believe with this one, it's clearly elaborate. The process of default of a loan currently applies to all loans, not only to the non-mortgage loans, but also with the mortgage loan. And the most asked questions that is there, and maybe I'll request maybe Lizzie to answer on this one. Does the mortgage allow someone to construct rental homes?
At this point, we are not doing multiple units. We are financing a unit per member, because when you're doing rentals, it means then you're looking in the direction of doing a commercial property. So for now, that is why we are calling it residential owner occupier, 1 unit per person. So it is now for purposes of you staying in the property. We may not control you being there. That's the other challenge. But at the end of it all, we can only fund 1 property per person. And that is the only way we will control the fact that you will not venture into the commercial side where you have multiple rental units, but you will be financing the mortgage for purposes of you occupying the property. That's why it's 1 single unit. However, we have our development loan, where if you come in and you're constructing a property, depending on your income, then that is the option that we will take for you. And we'll be using the property as your security, because our development loan accepts us to use tangible collateral, that is land or motor vehicle. So for multiple units, we will not do the mortgage for now, because we are still yet to come up with that option of you doing multiple units. But we have other products that are in place that will be able to support that venture. Thank you, John. Back to you.
Okay, thank you, Lizzie, for that. Also, these are the question again that I've seen maybe 3 or 4 people have asked. Do you do off-plan buildings?
At the moment, we are shy on off-plan, majorly because off-plan, sometimes you find developers may take some time in completing the project. So for this particular case, if you want to have a property that is being constructed from ground, then we will take the option of our Faraji construction loan. But if you are purchasing a property that you want it to be constructed by a different person, then off-plan will not be an option for us now. So that's why we recommend that you do a mortgage that is fully complete and ready for occupancy. So for now, we are not doing off-plan, but I know that there are ideas that are being pursued by the marketing team so that we have a developer who's in place and who has been vetted properly, so that at the end of the day, we may consider doing an off-plan with this particular developer, knowing that we understand their timelines and we've seen a proven record of what they do. Thank you.
Okay, thank you, Liz. Again, there's another question here from one of our members from diaspora is asking if there are any products or any projects that are currently being funded in.
Currently, we have the Crystal Rivers, which is under the Safaricom team. We also have other projects that are being done by our sister company, that's Safaricom Investment Company. But at the same time, our marketing team is also negotiating with developers, especially for the Faraji umbrella, because we know that there is the other side of us that would desire to own a home, but an affordable home. So at the moment, we have the Crystal Rivers and also the projects that are being done by Safaricom Investment Company. And at the same time, we are also trying to bring on board other projects that we will be sharing, especially with our diaspora clients, so that they are able to venture in the investment comfortably, knowing that it's something that has been well vetted and has or their interests safeguarded.
Okay, thank you very much, Liz. And now, just to take it further on this one, because I'm seeing the current questions that are coming are trickling in very fast, and there are very many. We might not be in a position currently to answer all of them, but we'll try our level best to share to all the members what they have asked, and both specifically, individually, to the question that you have asked. And from this point, we'll have to have a feeling of our members on what they have learned about this session. And we have a small poll that we have made in, we want to launch in, so that as we continue doing the Q&A, maybe you can take 1 or your time, 1, 2, 3 of your time to answer those questions. And the juicy part of this one is that we would love to reward our customers, and we'd want to say that whoever will get maybe the 3 questions all right correct will reward you accordingly. And the questions have been launched now. So as you answer, maybe I can still take in 1 or 2, 3 questions that are there. And one looter has asked that what cost applies in case of buying off a mortgage. Looter, I think with this one, it was clearly elaborated by Lizzie in terms of the cost applicable, that is the charges, the valuation charges, the insurance charges, and many other. For this one, I'll request you that you get into contact with us so that we can send you a catalog on what are those other extra cost charges that you might have in the product. In regards to one, Jason, what are the application costs for mortgage takeover? Lizzie, on this one, what's your take on this?
If you're taking over a mortgage, the costs that you will incur are more or less the same when you're buying a house. The only cost that we may not be able to know is if the institution that has financed you is going to charge you an early redemption fee, because there are some banks that will do an early redemption fee. But what we know as from our end is that when we are taking over a mortgage, you will incur the valuation fee, you'll incur the conveyancing fee, which will include the same way transfer and charge. So the cost is still the same, insurance fee is still the same. If you had an insurance with the other institution, then you will need to now follow it up with the institution to refund the payments in case you still have you had done maybe for a year and you've cleared it before then. That is possible and it is acceptable as per the insurance regulatory authority. So that is something that I believe you can be able to follow through and get your refund. So the only cost that we may not have a control on is the early redemption fee, but the other costs are as per what I had shared earlier on in terms of what is expected as you are doing the conveyancing. Back to you, John.
Thank you, Lizzie, on that. Some other questions that have come in is in regards to, I'm seeing mostly the employed people, and there's somebody here who has asked if your contract terms end at 2 years renewable, are you still eligible? The take for that one is yes, you are still eligible. However, now the trick with that, the T&C that comes with that is that if you are able to repay the same mortgage within the contract period that your contract ends, that will be best. However, I believe you can still apply as an individual member so that you can be appraised as a non-individual member. I'm seeing the polls. The polls have come in, and we'll be ending it in the next 30 seconds. So if you still have anything that you maybe you haven't submitted your polls, kindly do so. Meanwhile, somebody here has asked about the interest rates, and yes, we have different for the construction of mortgage. It's 9%, and for the readily houses, it's 8. I think 9% both. Correct, Lizzie?
Ready homes is 8%, construction is 9%, Ustawi is 12%.
Okay, thank you very much. So without any further ado, we have ended our polls at that, and we'd wish maybe if you still have a question, one or two, because I'm seeing somebody here has raised his hand. Let me see. Esbon has raised your hand. Maybe Esbon, can you ask your question? Hello, Saradi? Okay, maybe Saradi. George?
Thank you. I was actually asking the question regarding the people who want to construct their own houses. But there's something that has just been mentioned that for those who are constructing it's 9%, but I've not seen those details. I think the PowerPoint was showing us the one for buying at 8% and the one for 12%. So what are the details for those who want to construct?
Okay, thank you, George, for that. I believe we are going, after this, we are going to share a catalog showing each and every product that is there and all that. So maybe for now, we might not be in a position to go back to that slide, but we'll share with you that.
Allow me to clarify to our member, George. The construction product is available, and it requires its own session because there are different details to it. And I know we are not done with our member education today. We were majorly looking up to the members who are interested in buying a ready home. But I know as you are interested in the construction, we will have a session for that so that we can also educate you on the same. As John has mentioned, we will give you the details for our catalog has the details for the construction product that is also available to our members. Thank you.
Thank you, Lizzie, for the input. I'm seeing again here, there's somebody who has raised his hand, Brian.
Yes. So I was asking if it's possible to use the loan to purchase and develop land.
Sorry, come up again.
Can you use the mortgage to purchase and develop land?
And develop land. Okay, Lizzie, what's your take on that?
For undeveloped land, that is land that does not have any property on it. Unless you want to construct on it, then we'll do a construction mortgage. But if you're just buying land, then we have a product under the land loan, or you can use any other of our products to purchase the undeveloped land. That is vacant land. I want to believe that is I've understood you well when you say undeveloped land, that is vacant land.
Okay, thank you, Lizzie, on that. Again, Brian and all other members, like I've said, and we are going to circulate once we clear on this one, we are going to circulate on our catalog so that maybe you can go through each and every aspect of the MON. And if you have any question that you might want to ask, you will do it via our official email addresses that will be provided. And also you can call us via official telephone numbers that will be provided for in that mail. Otherwise, without any further ado, maybe I'd wish that we close our session at that, and wish to maybe invite Anita to just say something before we do the closure.
So thank you, John. Thank you, Lizzie, for the session. We appreciate the members for taking their time. Once again, today's session was just to walk you through on how you can access that dream home that you have always been looking to have. Otherwise, as John mentioned earlier, as staff, we are available to guide you through the various products that we have, and we wish you a nice evening ahead. Thank you. Back to you, John.
Okay, thank you very much, Anita. And from my end, I want to say a big thank you to each and every one of us, or each and every one of our members who took their time to maybe join us and have a discussion in regards to the products that we have launched today. Like we have always said that this is not the end, but it's just the beginning of endless member education sessions that we'll be having, and hoping that we'll see you in the next sessions much further and in a large number. And with that, maybe I'll request Susan to close with a word of prayer.
Thank you, John. Let us pray. Thank you, Lord, for that informative session we've had today. We want to ask you to bless us, and we bless our evening. In Jesus' name we pray and believe. Amen.
Amen. So thank you, Susan, and wish to thank everyone, and have a good evening.
Safaricom Sacco is your trusted financial partner of choice, providing diversified products and services to empower you. Since the year 2001, Safaricom Sacco has registered significant growth with a membership database of over 12,000 from a humble 222 at inception. We inculcate a savings culture in our members and give them access to loans to help develop and improve their economic well-being. Safaricom Sacco seeks to extend its vision of being the financial partner of choice by allowing members to introduce their loved ones, spouses, children, friends, and relatives to the Sacco through the Mlete Ndani initiative, because empowering your loved ones is empowering you.